Hey everybody, welcome and welcome, and hope that you all join me for my uh, start analyzing or chart analyzing session where I host it every Tuesday and Thursday evening to go over current market conditions and how we can likely play them. All right, we'll hop right in. So as I always start, I look at the heat map of what has happened today. Quickly give me an overview of the market. So you can see today was day where everything just basically dropped. Only a few green stocks. You can see, Disney here, VA, Boeing, Coca-Cola, uh, Philip Morgan, Lin, and U. But overall, the general market is all going to the downside. So let's go ahead and look at the charts. So on Tuesday, like I was mentioning, um, we are in this danger zone with price. Right? Danger zone is when price likes to stay between the 50 moving average and the 200 moving average. So the 50 is this top one, the 200 is this top one, and you can see it went up to test the 50 here and then got rejected. So this is a huge candle to the downside, right? Strong selling. We got rejected off the ceiling over where the 50 moving average is, right? Around 4 uh 455, 455 to 56, that range. And you can see we got that huge sell off there. Um, so as I mentioned, whenever I see price doing this, where it's between the 50 and the 200, this is a weak sign for me. And weak as in there's no clear market direction. We could just bounce in here for a while. But the thing to really look out for is if we're forming lower lows or higher lows. Right? Eventually, it might test this low again, or it might go to here. But we want to keep an eye out for that. Right. So on the daily today was a huge rejection to the downside. We're probably going to go back and test the 200. 200 is sitting right at 440. Right, 440. So be on the lookout. Probably in the next day or two, we might have a day where we drop in price. The market might continue going down lower on the hourly. You can see this double top here, and on the hourly double top here, and then boom to the downside. And when price is below the 50 and the 200, here is a bearish sign for me. If it comes back tomorrow, maybe it'll test this 450 as resistance before it shoots down. But we really have to pay attention to China Open and London Open to see what they do. They might continue to sell off, and tomorrow we might have a huge gap down. Right, it might go down to test 445 right here again. So be on the lookout for that. Tomorrow is Friday too, so very unlikely there's going to be a whole lot of new positionings being open for the long term. If anything, we're probably going to see huge swings in the market, a lot of volatility, and so one thing to be careful of. And what was leading so past not this week, the last week was right here on here, but the week before that was here. The thing to pay attention to is around 11 a.m. Eastern. That's when London closed. So pay attention to that area. Right. Back to the daily, to Apple. Take a look at Apple. See, even Apple fell today, and you can see being 7% of SPY when Apple does fall. When SPY does fall, a huge percentage is also because Apple is falling down also. You see the big red candle here. Hopefully it holds above this 50 moving average. I would like to see where it goes, or it might go into this range right here, right into this tight range, and into the danger zone, the zone where nothing happens. Price just likes to stay stagnant. So it could go here, but I want to see it hold this right here. So hold above 170 is where what to look at. So we fall below 170, we might be in for a crush. Right, we'll continue to the downside. AMD2. AMD today we fell. Right? Again, that this is the only thing that's lining up with all these charts. They're in this zone where nothing is really happening. Everything is just going sideways. We have a few days that's green, but it doesn't really take us any higher. A few days that's red, but doesn't take us any longer. So it's just a good little swing. And you can see that zone. This zone is around from 130 to around 115, so $15 range. So you could take advantage of that. Depending on how you see the market going for like 6 months, you might be picking more longs over more shorts, or more shorts over more long. If you have a bearish outlook, you probably want to short more. So every time it gets to 130 or close to 130, you're probably taking a short position. Every time it's getting to 115, if you're long bias, you'll probably be picking up shares. So that's really up to you and how you want to play it. You can see here, this zone right here, price is in that zone again. So we could just see it bounce for a while. Last time we saw this happening, it lasted about 6 months before we broke it. So it could be some time before we see any movement out of it. All right, going to the hourly, IND. The hourly, you can see here. All right, double top. See this double top right here. Rejection here. And the one saving grace for this hourly, and I don't know how much of a saving grace it is, but price did still close above the 200 hourly. It's above 124, but it looks kind of weak. It's a huge day of literally just straight up dying for the stock. Down here. So tomorrow it might continue. Right? You might have a continuation of this bear move here. Right? Let's go. So this bear move right here. Nice. 90 days. Right? Could be a continuation. If we look at this could be a really long bear flag. Right? Bear flag. So continuation down this side. We're going to go back and test this 100 low. That's one thing you can see. A few more days out, right? 100 low. Could be retested again. Right? Not out of the question. Could be if that's what you've seen. But this is what I'm seeing. So it could be a bear flag right here. Pattern. All right. Look at it. NVIDIA. Looking at these ones because they're mega techs. Usually mega tech rules the market at the moment. So looking at that gives you a general sense of where the market is going. There might be one or two stocks out there that aren't following this trend, but most of the time they're going to be following the trend of what mega tech is doing. Mega tech is majority of the market. right? Getting in that dead zone, that danger zone where it's not really breaking up, not really breaking down. Today is actually, the daily shows a rejection. See there, right? Huge wick to the downside. Tomorrow, I think it might continue. Maybe it go back and test 230. Could be a little good load up area. And like I mentioned, we could see it just bouncing between this area, right? Could be like this for a while. It could bounce in between here. So be on the lookout for that. Nothing is set in stone yet, but there's a lot of headwinds coming up. So headwinds are the rates increase that are coming up, inflation being at all-time high. It keeps going higher. I think that last report was like inflation increased it by 7% or something. Um, the government is getting out of the stock market. They've been buying the last 2 years, so about time to get out, and that's gonna cause another sell off too. So you can see on the hourly Nvidia, it did break above this little double top here, right? This right here, the double top was here, right? And it came back and it tested this support to see if it was a true support, and it actually fell through. So tomorrow red, I don't know, it could be. Looking at it right now, tomorrow is looking like it's gonna be a red day. But let's see, it's gonna be crazy. It's not gonna be a one-way thing. Hopefully, you can. We would like to pray that it's a one direction day where it just keeps going down, or it just keeps going up. But what we've been seeing the last few days is that we have a move to the upside and then a move to the downside of equal force. Now, if something like that happens tomorrow, you might want to be careful. Stocks only goes up. That's only true to a certain extent. And given a long enough timeline, stocks do only go up, but only good stocks. Not every stock. If you want something that only goes up given time, you might want something like SPY, ETF. Right? Nvidia. Let's look at Facebook. Somebody asked me today. They sent me a question asking about Facebook and if it was a good thing to add. Now, Facebook had earnings miss here, and that explains this huge gap down, right? Overall, it's still a company that produces a lot of earnings. It's just getting hurt because a lot of bad publicity, um, and honestly, we don't know where bottom is going to be. But my suggestion to anyone who wants to buy Facebook is your best weapon for you right now is to uh, average in, right? Don't buy your full position all in one go, right? Break it up. Right now is really high risk, or basically everything is really high risk. So break it down. If you're thinking that you want 100 shares or something, maybe break that down into tenths, right? Buy your first tenth and keep doing that every month or every 2 months, and just eventually you'll get to your 100 shares. But that's one way so that you don't get hurt if it continues more to the downside. Because in the short term, the market could swing any direction, and there's no such thing as too low for stock. So we're looking at this. We're looking at Facebook where it broke down through every zone that we had, every support resistance zone that I have charted, and the next, it's basically back to 2020 prices, which is same as 2018 prices. But from there, right, if you think it could continue down, even down lower, it can go down to as far as 140 or 150. It all depends on what the stock is going to do. We are just small investors. We do not hold any weight, any significant weight in the market. So all we can do is position ourselves so that we can ourselves so that when the whales are going the same direction that we are, uh, we're gonna be riding with them. And right now, the whales are not buying Facebook yet. But if you think it's still a very good company that still produce the numbers and have earnings and have cash on hand. So fundamentally, it's still a very good stock. And you need to be very careful with it, right? Break average in, if you can see here, huge red. Don't really show any sign of stopping yet, right? Drawing this out, that was the earnings, right? First beat, so we went straight down. And so we're doing this, and it looks like if it's continuation, it's going to drop down even more. So we want to be very careful. So Facebook, at the moment, if you can hold off on it. If you feel like you must buy, slowly buy, slowly buy into it. And that's saying buy when everybody is fearful and sell when everybody is greedy. Uh, for sure, everybody is fearful now, but if you can hold off a little bit before buying, do that. If you feel you necessarily need one, start averaging it. Break your full position up into smaller chunks. All right. So we went over Apple, Nvidia, AMD. Now let's take a look at Amazon. So Amazon has established itself in this range again. This range that I've been trading for the last year, taking full advantage of it. It's still in there, so it's right in the middle of this range again. Now it's in an interesting spot. Even though it's in the middle of this range, you want to be careful. Everything moving the market to the downside. Because what it might start to do is the middle of this range, if it cannot stay above there, right? So we're looking at 3,200, 3,200, 3,300 in that range. If it can't stay above that and move more to the upside, we might have a continuation to the downside. Now that's not completely out of the question. You gotta just look at it and take it how it is. With the 50 being below the 200 too, that means that more momentum is to the downside. Even though we're seeing it back into this range, the middle of this range, it could reject off and reject to the downside. Looking at the hourly chart is still looking good, but the whole market likes to move in sequence with one another. It's very rarely that we see mega tech one moving up while the other ones are moving down. Most of the time, what you normally see is one moving sideways as the bulk of them are moving down. But at the moment, you see here, you know, try to make a leg up on the downside. We'll just have to wait and see if this is gonna hold. This is this holds and this is bottom right here and it bounces to the upside again. We'll see that test of the resistance of that range at 3,500. But this needs to hold. If it doesn't hold, then tomorrow it tanks. Right? Friday it tanks. We might be in for another few days of that. Right? Now, when the markets are going down, or to get an indication of how likely it is to go down, we like to, if you guys didn't know, we like to look at VIX. So you see the last week that we were going up and we're staying green, had a few green days. VIX was down, and VIX measures the amount of out of the money contracts that are out there. So VIX is going down, that means that amount is decreasing. So people are neither covering or they're not adding on. VIX can only stay so high for so long, but today we have a green day, a leg up, right, at a support area. So this 200 support at 20, bouncing up. We'll see to the tomorrow if it continues higher. Right? It's gonna be highest if it breaks over 26. Things could keep going. And you can see here this chart of VIX. When it spikes, it likes to spike hard. Right? So if we're thinking that this is the peak, right? Comparison to all the other peaks, right? We have a peak here, volatility peaked here, it died down, then we had a little spike up, about 2.5. So right around 26 or 28, that area is where we could expect it, right? Something like this. And then the spike up in a few months back, and it spiked up, then died down, spiked up again to about half. Right? We've seen that pretty much every time. So that's a thing to pay attention to. So the next few days, we could probably see it spike up again to around 26 to 28. And that will probably mean that the S&P 500 is going to go down. Right? So even though it's aftermarket, one thing that we can look at to know where tomorrow will be is /ES. So /ES is the futures, E-mini S&P 500 futures. Now, most of the time, they're pretty close in price. It's just this one is just a future, so that it's open 24/7 versus SPY, which is open only during the market hours, right? So you can see here, this continues to the downside, way below the 200 now, below the 50. It's sort of slowing down. We haven't seen any huge increase yet, but usually around 1 or 2 a.m. is when London opens. So that's when we see a huge increase. But we want to be very careful. So at the moment, they're right at the bottom of the support. If you're looking at this zone, the way I'm looking at it is this was the double top, but this was the support area. So this was the range that it was bouncing in between. If this could hold tomorrow, maybe we might go back and test this. But if not, if this breaks, all hell might break loose to the downside. All right. So with that, I'm going to end it here. Hopefully this has been helpful for you guys. And I've tried to keep up with the current market conditions, just giving you guys a hint of what could happen. So I'm not saying that I am good to any sense, but this is part of doing your DD, or at least I'm doing my DD. Hopefully you guys are getting something out of this as well, and it's helping you guys out. Maybe we share a similar thinking process, and when you guys are watching this, maybe it's just adding to the what you guys see. But let me know in the comments. For sure, join our Discord if you haven't already, and subscribe to my YouTube channel. I do plan on putting up a few more videos that are outside of my Tuesday and Thursday nights. So right now, I just want to break down my strategy a little bit more to give you guys a hint of it. Because as you guys can see, my strategy is very simple. It's looking at zones, like at the 50 and the 200. So be on the lookout for that. And hopefully you guys are staying safe. Volatility is still pretty high. So stay safe. And as we go into the weekend, hope that everybody is having a good weekend. So with that, I end it here. Everybody stay safe and have a good one. Until next time.